everyone, welcome to the market update. My name is Kay Kim with the Traders Club. Thanks for tuning in for tonight's market update episode. Today's February 3rd, 2017, Friday. As I record this video, market has been open for about 3 hours and a half. This is about lunchtime. We've got 3 more hours to go. So I'm doing this video intraday here as the market is open. That's why you will be seeing some flashing lights on your left. But today we're going to be talking about some of the indices here. Spider. We'll look at financial sector and the NASDAQ. We'll look at some of the equities here. So some of my current holdings: Apple, Boston Scientific, Intel, eBay. Obviously, I'm all out of Apple. We'll talk about which level I may think about going back in. We'll look at energy sector, treasury bond, and we'll finish off with some precious metals there in the miners. Looking at Spider here, and everybody was so concerned about this island reversal, and obviously that was a legit island reversal. You can see we got the here. Let me zoom in here so you can see, so we can talk about it. You see, if I just really zoom in here, you can really see that this was a gap up, and this was a gap down. And this is what we call evening star reversal, right? We got the bullish candle, we got the doji, and then we got the bearish candle. Well, to make that worse, we have island reversal on top of that. So this is actually pretty significant, minor term reversal pattern. And given the fact that we had that, through that pattern after coming up and cultivating, printing new all-time high. So I'll tell you exactly why this happened psychologically, right? And this market never makes it easy for anybody. And again, this is something that I talked about in the last update, the psychological of this market, the psychological attitude or sentiment of this market, right? And obviously, everybody's watching this level because we've been consolidating, what? For about 2 months or so, right? We've been consolidating for 2 months. So everybody, first of all, everybody's getting irritated that it's not either, breaking down or breaking up. So this is where, that time can really kill the short-term traders. So we're just really, really consolidating. And something that we talked about in my last video is that everyone is looking for this kind of pullback. Why? Because they missed out, right? It's about 5% pullback. So they missed out on this move. So they tell themselves that, well, this time I won't miss it. This time, if we see 5% move on Spider, I will be buying that dip. And they're getting ready. But they don't want to just get ready. They don't want to just wait around. They want to short here. Okay? They want to short here. Because that's their master plan. We short here. We hold it to about 5% pullback, maybe 220, 219-ish, possibly 218. In retest the 100 SMA, I'm buying that dip. In the meantime, I'm going to go short. Because I didn't make any money off of this. I want to make money off of going short. And something we talked about is when this market always follows the majority, when this market knows that that's what everybody's thinking, that's what everybody's looking for is a pullback, it doesn't always give you that pullback. So what does it do? It gaps up. And then shorts are in shock. They're covering. However, the shorts that have maybe a little bit more fortitude, they'll tell themselves, well, I'm not going to short here. Well, I'm not going to cover here. Man, I'm going do or die at this point. I ain't covering here. I'm just pissed. Shorts are thinking, nah. This market, the Trump is going to crash this thing. All these different things happening. There's no way it's going to go any higher. So there will be some shorts like that, but what's going to happen is once it clears, many will be going long because of so much pressure has built. There's so much attention that it has gotten that that 227, 228-ish area. And this market never makes it easy, especially after a move like that. So what happens is we get a couple, your watch right there, we get a couple of days of move here, right? And this is where possibly longs are adding more to it, or possibly some people waited for the pullback start adding, right? And then what does it do? It gaps down. It gaps down. And then this is where everybody want to talk about island reversal. And that's a legit island reversal. It was, in the minor term, it was concerning for the bulls. But intermediate term, we would still have to give benefit of the doubt to the buyers. Why? Yes, we have island reversal. Yes, that's a legit island. But because for the fact that we have the higher lows and higher highs, we're still in an uptrend. And still, we're above this rising term uptrend support. This is the reason why we draw these support levels. Not because I'm just trying some voodoo shenanigan, so we can understand the potential level. As long as we stay above this uptrend support, benefit of the doubt goes to the buyers. But hey, we do have, pretty fast minor term selling pressure there, right? And you know what, to be fair, on my last video, I did say that the worst case scenario will come and fill the gap and continue higher, right? That's what I said. So, but it did come down a little bit lower than what I said. So it come down to maybe about 226, but I said, well, the worst case scenario will come fill this gap and continue higher, but it actually came down a little bit lower. So just to let you know, and then we finding support at that support right here. You can see this support continue to get, you see the buyers coming in, and then we gapped up. What do we see today? Well, the island, this island is no longer island. Now that's island bottom now. We got a gap down, and we got a gap up. That's island bottom, back to back. You see, this is a shakedown that this market is going to see a lot of as it continues to move higher. When most traders are sick and tired of this market, a lot of shorts actually, really the bears are really irritated, really irritated. They're very exasperated, and at this point they're sick and tired of it. This is where they will start to say it's rigged and this market is a joke and things like that. But once most traders are tired of looking at spider, then this thing is finally ready to move when everybody's getting out of it, right? Recently, I wrote an article, The Matrix Bulls. You can go ahead and look at it on my blog there. But this was back in April and May 2014. Very, very similar price action. Look at these buying the dip tails. So you can actually see the sentiment, what's going on here. And exactly same thing happened back in May 2014. It goes up, makes a new high, and traps the buyers, and actually traps the buyers and sellers, and then this thing gaps down, getting that island reversal. Why is it trapping sellers and buyers? Well, the buyers start going long at this point. They're getting stopped up below the gap. Same thing happened today, or just, a week ago. How does it trap the shorts? Well, they're shorts. They're covering here. They're covering, you see. That's what the market does. Because before it makes a move, it wants to make sure, psychologically speaking, it wants to make sure to leave as many as possible behind before it moves without you. This is the market that's designed to do this. Big picture, primary term, intermediate term, and minor term. Last video I talked about primary term. Now I'm talking about the minor term here. But look at these tails. I mean, it's just very, very similar sentiment. And it's not like I was scanning through and see, well, what does it look like? What's happening today? I just specifically remembered back in April, May 2014, this happened to me. I'm going to be fair with you. I was actually leaning towards more bearish back in May and April. April. I was leaning towards more bearish because I thought, hey, this was a false breakout, and we have island reversal on top of that, or better yet, we have an evening star reversal that turned to island. So we got the evening star and the island, and the false breakout. So I was actually more bearish back then. I remember, I vividly remember what I was thinking back then. I thought, this looks very similar, so I went back. And then I kid you, I was like, oh wow, it looks a lot like April, May 2014. Very, very similar. We have rising uptrend support. We got all these dip buying tails there. Rising supports held. Island reversal just right above this all-time high. See, I want to expose this scheme to you, to my followers on YouTube and Twitter and my blog. These are the schemes that this market does. This market, this isn't new. This is something that the market has been doing for years. It's a master deceiver. Trying to micromanage this every single day, looking at this stock market every second, every minute of the day, you will get slaughtered. You will get knocked out. This is why I don't know how day traders can survive this market. This is true that 90-95% day traders fail. This is why I love what I do. Position trading, long-term strategy, I don't have to worry about these shenanigans. But put things in perspective. This market loves to fake people out. This is exactly what it does. And then what happened in May and July? Well, finally, after this thing sees this shakedown, looks like this is going to be evening star reversal. Bears are probably chanting back in May, July 2014. This thing, we're going to see 10% correction, maybe even 20%. And they're going to say all kinds of stuff, all kinds of fundamental stuff that is happening back then. And then market just goes right back up. This is the reason why, just because it's fascinating to me that I actually love to go to StockTwits and just read through what people are saying so I can study most common traders' behavior. And I remember what people were saying here. And they are saying the same thing today. It's different people, but they're saying the same thing. Different time, but market behaves in a similar way. So I think if we stay above 228.65, here, let me draw the line there for you to see. 220.76, we stay above it and it's close strong. We might try to pull back here again. And if we hold this level, I think the Matrix Bulls can make it. The Matrix Bulls can able to do this and make it like May and July 2014. If that's the case, if that happens, I think if that happens, I think we'll see bullish run into the summer. So we have February now, March, April. I think, possibly early May that this thing could make its run there. Possibly 236, maybe 240. I think there's a good chance you would have another bullish run. So that's, again, as of today, just looking at this chart, what do we see? Benefit of the Dow continues to go to the buyers. Why? We have a 10 EMA rising, we have 20 EMA rising, we have 50 EMA rising. Why be bearish? Why try to call tops here? See, bears are always short-lived. It's always the bulls who gets the full move and able to profit from the much, much bigger move. It's always the bears get the scraps and leftovers, right? And even with that evening star reversal, the evening star that turned into island reversal, just very, very quickly, it just goes right back up. Because why? Benefit of the Dow goes to buyers. It's very, very difficult endeavor to call tops in a bullish market. Everybody want to talk about trend is your friend, respect your trend, but nobody knows what that means. Nobody knows how to apply that in trading, right? Bullish as of today. Let's see if we can hold 220.76 here. I actually spent 15 minutes. I was planning to do much shorter version this time, but I'm going to go through this very, very quickly here. Financial sector. Again, you can see we're holding this level. We're consolidating here. for a couple months here, this really looked like a bull trap there. Probably a lot of people start adding to shorts on that vicinity, or either bulls covering, or I mean bulls getting stopped out. But again, this market, master deceiver, and always knows how to trap on both directions. So if this thing breaks out, there's a good chance it will continue higher. So those are the levels to watch. There are Qs. Qs continue to be bullish, and you could say, well, this thing stretched. It should come down. No, I don't know when. Nobody does. Nobody does. Yes, it's stretched, but I don't know when it's gonna come down. Who knows when? You know, last time when it started moving higher, I mean, this thing moved. Let's say how much it moved. I mean, this thing moved like 15, 16%. But when it pulls back, it only pulls back like 3%. So why try to go for the 3% when you can go for the 16%? You know, you can have another 16. If you have another 16%, that's like, who knows? I mean, you could do something like that. I'm not saying it's going to, but it might. But hey, I'll say this: as long as they continue to respect the 10 EMA, it's an uptrend. It's a minor term bullish. If 10 EMA loses, look at 20 EMA. If 20 EMA loses, look at 50 EMA. That's exactly what happened here. We lose 10 and 20. What does it do? It comes to 50. We find support at 50. So that's exactly what's going to do in some of those levels. These moving averages are rising. Why be bearish at this point? I don't get it. I don't get anybody who wants to call crash or this is a bearish. This thing is slaughter this pig. Those people, they just do not understand this market, and they're the most miserable trader on earth. They just can't trade this market. They just don't know how to. You know, if you say this of all probability game, then why go for these little quick pullbacks when you can able to, you know, make the much bigger move to the upside? It's because, you know why? Because this is where our human instinct, humane way of thinking, or our humane way of looking at things in a rational way, that, well, it can't possibly go any higher. It cannot go any higher. It's gone up so much, it can't. Well, it can go higher, and it will go higher. Why? Because we're on an uptrend. Well, what if it comes down tomorrow? It might come down tomorrow. I don't know. I don't know. But benefit of the doubt goes to the buyers, and so we're gonna see these pullbacks. But buyers always win when we're in an uptrend, right? Quickly, let's go to Apple here. Obviously, I'm completely out of Apple. You can go check my journal post that I've done. It has been a great trade. These were my entries there. I closed half there, I closed half, and this is I closed everything. So good earnings there. If this thing comes on, fill this gap, I'll be going long. But I don't know if it's going to. If it fills that gap at 121, I'll be going long there. That will be my plan for now. But we'll see how that plays out there. But right now, as far as the daily chart is concerned, we look like we might have a bull pennant pattern. But again, this thing is up a lot. But it doesn't mean it can't go any higher. I think we're probably going to see a lot of volatility, though. We may not see a big, huge move. We are actually dealing with daily and weekly overbought sentiment. See, overbought. So we're dealing with the overbought sentiment. Either it's going to correct through time with the consolidations, or we're going to see this thing pulling back. We may not fully fill the gap. It may just pull back to this uptrend and then continue higher. If it does pull back to this uptrend, continue higher, I will not be buying that. I need deeper pullback for me to get in for my long-term trading, longer-term trading entries. I would love to see this thing retest 100 SMA. I'll definitely buy that dip vigorously if it does retest that 100 SMA. What could possibly happen though is it kind of fizzle higher and then like move sideways for a little bit, and then it possibly come and fill the gap, meet with the 100 SMA, and then continue higher. I'm not sure at this point how this is going to play out. But We are dealing with the overbought sentiment on Apple, but the trend is up. Not a time to short though. Boston Scientific, I am holding full, actually holding half. I closed half prior to the ER, but I tweeted out that I'm going to hold through the ER. This was my entry there. I closed half just week and a half before the ER. I held through the ER. I'm holding still that position. I think my next target will be some of these levels, 2650, 27-ish. Some of those levels I may be closing out some of the some position. I'm probably not going to close everything because I am bullish on Boston Scientific long term. I may close out some and then wait for a pullback and buy more. Something like that is kind of what I have planned. Let's go to Intel. I'm going to go through this quickly. Intel pulled back. This was my entry there. I blogged about it, tweeted about it, and then I closed half prior to the ER. No, actually 30%, not half. So about 1/3 I closed there, and then this is also another evening star. That's actually very legit textbook island evening star. This is island evening. You can see that he's got a gap up, gap down, big doji there, evening star reversal there. So I mean, any short-term traders would probably short there and cover in a few days, just quick few trades. But for me, obviously, for long-term trading, that's not going to get me get out of my position. I'm still holding remaining 70% positions. Currently, look like we are finding support at 100 SMA, possibly holding that 50 today. 10 and 20 start to cross down. So I'm not sure. Looks like we have a bullish piercing yesterday. If we continue higher, then my push piercing will not be confirmed until it starts to kind of reclaim that 1020 MA. So for the daily minor term, the sentiment is bearish until it reclaims at 1020 MA. For me, if this thing comes back down at 35.45, I may buy that dip and add more to my position. Let's go to eBay. eBay, I'm holding full positions on this. This is my entry with calls. I tweeted out that I'm gonna hold through the earnings. I'm held through the earnings. We holding the gap. Looks like bull pennant type of pattern, potentially go higher. But I'm currently holding through my full positions. I'm probably gonna continue to hold until 36 or 37 before closing it out. I am bullish on eBay long term. Okay. I'm going to skip through energy sector and treasury bond, and then I'm going to go through precious metals. I kind of went too long here. Let's go to silver real quick. I think silver, we're seeing some, I think last update we talked about this important level, right? So I think we gapped up above the important level. That's a good sign there. Why? Because now we have this kind of a minor term higher highs. So I think looking at more of a minor to intermediate term, we're still kind of bound by this long-term downtrend resistance, but we are staying above this. I think there's a good chance that it may move to the upside. We got this 200 SMA was a prior support, and then we are just trading right here. So that could act as resistance this week, next week. So if this does continue higher, watch that 200 SMA, kind of see how that reacts. And then if this thing falls a little bit, we got gap fill area. A lot of times that gap fill could act as support. So I think it's two levels to watch at 200 SMA 17, support at 1629. That's a good sign there that we holding above 1632. Let's go to GLD. GLD, good sign for GLD is, let me remove that for a second. Good sign for GLD is this is an important pivot. We're just slightly above that level, but we understand that there could be a lot of head fakes and things like that, a lot of shenanigan. So, and again, we're still bound by this resistance also. We got the 100 SMA coming. GLD is still, we got that cross right there, 100 and 200 SMA cross right there. So we are trying to stay above this pivot, but not looking too confident at this point. But this does look like potentially minor term higher low if this thing can able to kind of get up and continue to cultivate in that fashion. This is intermediate term downtrend resistance. This downtrend resistance is primary term coming all the way from the top. So those are the levels to watch here. If this thing falls back in, if this becomes the kind of a head fake type of move, then a lot of times these head fakes is no good for gold. You see these head fakes? They got the clear their resistance, boom, falls back. Clears the resistance. So if this becomes head fake, then it might come back and retest 112 there. Those are the level to watch. Lastly, miners, and I'll let you guys go. GDX, we can fill this gap. I think we talked about in the last update that it may go up and fill that gap there. A lot of times when gap gets filled, it acts as instant resistance. So that gap got filled. You can see a lot of tails there. 200 SMA is currently acting as resistance. It did act as support back here. Currently act as resistance there. But again, GDX looks a bit more bullish than gold or silver. We clear the pivot, and you can see these moving averages start to cross back up. I think maybe because the equities are bullish and the spider's bullish. So I think these mining companies are maybe using that environment to having or attracting buyers. But at this point, good thing they were staying above it. If we can have to get up, this is a next important resistance, 2580. Let's say we pull back and continue higher. That will be a reversal. That will be a reversal intermediate term, inverted head and shoulders. But keep in mind, even with that, we have a long-term primary term downtrend coming in. So that's the level. I personally, for long-term trading and investment idea for GDX or gold, silver, I don't want to do anything until this thing clears well above that long-term primary term downtrend. If you're just been watching my video today, I mean, this is what I'm talking about. GLD, silver, they all have the same thing. This is a long-term downtrend resistance. You can see these peaks here. So, but I think good news is for the miners and gold and silver is when this thing came down, instead of coming all the way down, it kind of stopped short. And potentially that might be higher low before higher high. It's tough to say as of today, but got something brewing here. But let's take it, let's see how it plays out though with falling resistance right there. And again, current next pivot to watch is 2580. 2580. And then if it does come down, 2250 is a support to watch. It's the level, 2250 is a level that we have. Actually, we can see that 10 is rising, 20 is rising. A lot of these moving averages start crossing here. So again, we don't see that on gold. We only see that on GD. You can see we still have declining 100 SMA, and they actually have a death cross there on GLD. But on GDX, you can see we cleared. I mean, it's still declining, but the price is staying above the 100 SMA there with these moving averages. The short-term moving averages are moving higher. So have a great night, great weekend. I'll talk to you next week.